The fascinating thing about stocks is that they're not just valued on pure numbers. It's this really interesting balance of rational projections and speculation. It's almost like how we value art, where two people can see the same painting and have completely different perceptions of its worth. Just think of stocks as living art pieces. They can be inflated, leading to those unpredictable outcomes we've seen throughout history, like during the Great Depression.
Whoa, so you're saying that stocks can be, like, super inflated just like art prices? That's wild. How does that even happen? Like, do people just suddenly start believing a stock is worth more just because they feel it?
Exactly. That's the crux of it. When you see stocks growing at 15%, it's often less about solid fundamentals and more about that speculative edge. Just look back at the 1990s in Japan. Prices skyrocketed to insane levels, creating a bubble. And when it burst, it led them into a prolonged economic depression, struggling to recover for decades.
Yikes, that sounds brutal. Do you think we could end up in a similar situation now? Like, are we in a bubble right now?
I do think we should be cautious. The current market has this feeling of wretched excess, with inflated stock prices and a lot of excitement that doesn't really have a solid foundation. Just like an artist could put a high price tag on a painting because it's the hottest trend, investors today might be getting swept up in a frenzy.
Oh man, that makes total sense. So if you're saying that all this excitement is just hot air, how should investors, recalibrate their expectations? I mean, what does that even look like?
Great question. It requires tempering those overly optimistic expectations. If I were to predict future returns, I think they'd seat more comfortably around 6%. Not nearly as glamorous as those high numbers we hear. That's a much more realistic outlook. We really need to be grounded in the reality of what's happening, instead of chasing trends that feel like art auctions gone wild.
Oh, absolutely. So it's all about being realistic, just not getting lost in the hype. That reminds me of those times when people were blinded by flashy ads, like those late-night infomercials selling things that seem like the next best thing but really aren't.
Yes, that's a perfect analogy. Just like those infomercials, the current market behavior is showing a lack of sound judgment from many investors. If we continue down this reckless path, who knows where we could end up? It's honestly becoming increasingly concerning.
Whoa, that's a lot to take in. I can't believe how similar stocks and art really are. So should we be, looking into more cautious investing strategies?
Absolutely. Adopting cautious investing strategies is essential. Think of it as curating your own art collection. It's about making informed choices, researching pieces thoroughly, and understanding their true value instead of just buying into trends.
That makes so much sense. So it's about having a clear game plan and not just getting swept away by the latest shiny thing. Wow, I really love this analogy.